Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Rigetti computing.
If you find our talks useful, please consider subscribe, like, and comment underneath.
Absolutely.
And before we really get going, I want to quickly mention that the link to our VIP Algos is right below in the description. It's an incredible tool for your wealth building journey, so you definitely want to check that out.
Yeah, you really don't want to miss the VIP algos. It's a fantastic resource if you're trying to navigate markets like this.
For sure. So today we are unpacking what happens when a highly speculative tech sector gets, a multi-billion-dollar government ultimatum.
Right, which basically means total chaos.
Yeah. Chaos, but also an immediate financial race. We're looking at a deadline that just ripped quantum computing out of the realm of science fiction and dropped it squarely onto the desk of every defense contractor in America.
It really is a fascinating puzzle because we're looking at this exact moment where highly experimental physics just violently collides with aggressive market speculation.
Yeah.
We're trying to understand how a company, specifically Rigetti Computing, ticker RGTI, navigates that tricky transition from, endless R&D into a strict federally mandated procurement cycle.
Now, right up front, I need to share a quick note with you, the listener. The analysis today heavily features some recent, politically driven policy actions.
Specifically, some executive orders coming from the Trump administration.
Exactly. And we need to make it explicitly clear. We are not endorsing any political viewpoints or administrations here.
No, not at all.
We are strictly impartially analyzing the factual market impacts of these policies exactly as the data reports them. Our job is just to follow the money and the mandates.
And to understand where that money is flowing, you really have to grasp the sheer scale of the macro context here. It's what just set this entire sector on fire.
Right, the hook. To follow the money, we have to talk about June 22, 2026. This date is basically the shockwave.
It completely altered the timeline. I mean, we went from this general sentiment of quantum computing is important for the future to a concrete, federally enforced mandate basically overnight.
Overnight.
Yeah. The executive orders established two massive deadlines that the entire industry now has to revolve around.
Okay, lay them out for us.
First, it demands a functioning quantum computer, specifically for scientific discovery, by the year 2028.
Wow.
And second, it forces all federal agencies to migrate to post-quantum cryptography by 2031.
And backing all of this up is a massive $2 billion federal funding allocation, right?
Exactly. $2 billion.
Okay, but let me push back here. 2028 is practically tomorrow in tech years.
It really is.
Isn't that an incredibly short timeline for a technology that's been famously, a decade away for the last 30 years? I mean, how much of this is just government posturing versus actual technological reality?
Well, that tension is exactly what the market is trying to price in right now. You're absolutely right. In hardware development, especially hardware dealing with subatomic particles, 2 years is a blink of an eye.
It's nothing.
The timeline might be incredibly aggressive, maybe even overly optimistic, but what happens when you introduce $2 billion of immediate liquidity into a space that's been starved for commercial validation?
Oh, people scramble.
Right. The mandate forces the capital to flow regardless of whether the technology feels entirely ready.
So it's less about whether they hit the 2028 deadline perfectly and more about the fact that the checkbook is open right now.
Exactly. When federal agencies realize they have a hard stop in 2031 to upgrade their cryptography across all their networks, they can't just wait around for the tech to be flawless.
They have to start spending now.
Yes, they have to start hiring consultants, evaluating architectures, and partnering with hardware providers today. The aggressive timeline forces enterprise IT budgets and federal procurement offices into, immediate planning cycles.
Which removes the vague someday potential of the sector and replaces it with actual immediate revenue opportunities.
Precisely.
Okay, so with the government suddenly banging its fist on the table and demanding working quantum tech now, who is actually positioned to build it?
Well, that's where the fundamentals of Rigetti computing come into play.
Right, because Rigetti keeps coming up as a primary beneficiary here.
Yeah.
But what are they actually building? Like, how are they separating themselves from just being a university science project?
So Rigetti is a fascinating player because they have something incredibly rare in the quantum space. domestic manufacturing capabilities.
Oh, meaning they actually make the stuff here.
Yeah, they aren't just simulating quantum environments in software, they are physically fabricating the chips in their own facilities, and they're doing this using superconducting quantum architectures.
Okay, let's break that down because superconducting quantum architecture sounds incredibly intimidating.
It's a mouthful, yeah.
When we say superconducting, how does that actually work compared to, I don't know, other methods out there?
It's vital to understand the difference because it dictates their entire business model. So there are a few different ways to build a quantum computer. You have trapped ion systems.
Trap time.
Yeah, which basically use complex, highly calibrated arrays of lasers to hold individual atoms in place in a vacuum, and they use those atoms as quiggets.
That sounds like an incredible engineering challenge to keep the lasers aligned.
It really is. Or you have photonic systems that use light particles,
Right.
which is why Rigetti took a totally different route. Superconducting architecture involves taking traditional semiconductor materials,
Like the silicon chips in my laptop.
metals similar to what you'd find in highly advanced classical chips, but they supercool them to a fraction of a degree above absolute zero.
Good grief, that's cold.
It's freezing, but at that extreme temperature, electrical resistance completely vanishes, and the electronic circuits start behaving according to the rules of quantum mechanics.
Okay, so they're basically taking the manufacturing processes we already understand from the classical chip industry and adapting them, rather than trying to build a completely new paradigm out of lasers and levitating atoms.
Exactly. By leveraging decades of traditional semiconductor manufacturing expertise, they have a clearer pathway to actually fabricating these chips at scale in a physical foundry.
That makes a lot of sense.
They use lithography and etching techniques that the global supply chain already understands.
Which brings us to the actual hardware. I see their 9-qubit Novera system is actively shipping to researchers, and they've deployed their 108-qubit Cepheus system.
The Cepheus 108Q, yes.
Right, but why is going from 9 to 108 qubits such a monumental hurdle? Because, in classical computing, scaling from 9 to 108 of anything isn't usually headline news.
Oh, in quantum, it is a physics nightmare.
Really?
Yeah, qubits are incredibly fragile. Any microscopic variation in temperature, a stray magnetic field, electromagnetic interference.
Basically, someone sneezes in the next room.
Practically. Even cosmic rays can cause a qubit to lose its quantum state. It's a phenomenon called decoherence.
Decoherence.
Right. And when it loses that state, your calculation is ruined. So when you have 9 qubits, keeping them stable is hard enough.
Sure.
When you scale to 108, the complexity doesn't just add up, it multiplies exponentially. Every new qubit you add increases the chance of the entire system destabilizing.
Oh, wow.
So being able to physically manufacture a 100-qubit chip that can reliably hold its state long enough to run complex calculations, that is a massive validation of their manufacturing process.
And they aren't keeping this hardware locked in a basement just to run internal tests either.
Not at all.
I noticed they're integrated with AWS via Amazon Braket, Microsoft Azure Quantum, and QBraid. Plus, they recently expanded a collaboration with Hewlett-Packard Enterprise HPE to integrate high-performance computing.
Yes, the HPC integration.
Right. So why is that integration so crucial for a company that is still, actively trying to figure out the fundamental physics of scaling?
Because it proves commercial viability. They do this through something called hybrid classical quantum workflows.
Hybrid workflows.
Yeah. Because if you want enterprise adoption, you can't ask a massive corporation to just throw away their existing server infrastructure.
Yeah, they'd never do it.
Exactly. Think of the quantum computer as a highly specialized math savant, and the classical computer, the HPC, as the manager.
Okay, I like that analogy.
Right. So the manager handles all the everyday paperwork, the data sorting, the standard processing. But when it hits an impossibly complex equation like simulating molecular bonds for a new drug, it taps the savant on the shoulder to solve just that one specific piece of the puzzle.
And then the savant hands the answer back to the manager,
Yep.
who continues with the normal workflow.
Exactly. So by integrating with HPE, Azure, and AWS, Rigetti is making sure their savant is sitting right next to the managers that enterprise clients are already using.
Proving they can play nice with the existing tech stack.
Yeah.
That's huge.
Yeah.
You have to plug into the software they already use. And to fund all this incredibly expensive R&D, they're sitting on a massive war chest.
A very healthy balance sheet, yeah.
The numbers show a $569 million cash runway for a company that isn't profitable yet, that buys them years of breathing room.
It does.
But the real kicker, the thing that seems to really shift the wealth-building context here, is their pending $100 million letter of intent from the Department of Commerce via the CPS Act.
That LOI is the cornerstone of their current valuation, but it's crucial to understand what this $100 million actually represents in the context of the GPS Act.
Right, it's not just a blank check.
Not at all. It isn't just a simple government grant where they a check and walk away. The GPS Act often involves the Department of Commerce taking an equity stake or implementing profit-sharing agreements or restrictive covenants.
Okay, so there are strings attached.
Big strings. If the U.S. government takes an equity stake in Rigetti's manufacturing process, Rigetti is no longer just a vendor. Their success becomes directly tied to U.S. national security.
So it's effectively nationalizing the quantum supply chain, at least in part.
In a way, yes.
It's like having the blueprints for a revolutionary new jet engine, but more importantly, owning the only domestic factory allowed to build them for the military. You create an impenetrable moat against competitors who don't have that government backing.
That is the perfect way to look at it. The government has recognized that quantum computing will define the next century of military and economic dominance.
They definitely don't want our most critical next-generation computing infrastructure being manufactured overseas.
Exactly. And Rigetti's domestic superconducting foundry is exactly the physical supply chain that CPS Act was designed to protect and accelerate.
Well, having the government's blessing and a domestic factory sounds like an impenetrable moat. But let's pivot to the risks, the bear case here, because you don't secure a monopoly without burning through a mountain of cash to get there.
No, you do not.
Just how much is this scaling process costing them? Because when you look at the Q1 2026 numbers, the reality is pretty stark.
It is. The R&D required to keep superconducting chips near absolute zero while scaling up to hundreds of qubits is brutally expensive.
I can imagine.
You're constantly building custom refrigeration units, specialized wiring, and constantly iterating on the physical chip design.
And the numbers reflect that. In Q1, Rigetti pulled in a mere $4.4 million in revenue.
Right.
But against that, they posted a massive $26 million operating loss. They have deeply negative free cash flow.
Yeah, there are burning cash.
And that $100 million from the CPS Act, it's an LOI, a letter of intent. It's a piece of paper, not actual cash in the bank yet.
Which is a huge distinction.
Right. We've seen situations where the government's terms are so restrictive that companies have to walk away. I mean, Google famously rejected similar government funding deals specifically over those restrictive conditions.
They did.
If Rigetti is burning $26 million a quarter, what happens if the Department of Commerce puts terms on that $100 million that Rigetti literally cannot afford to accept?
Then you hit the ultimate execution risk.
Yeah.
And honestly, Rigetti carries arguably the highest execution risk among its pure-play quantum peers.
Because of the physics.
Because they're racing against time and physics. If they can't finalize that cheap PS funding, or if their gate-based superconducting approach hits a scaling wall, like if they can't figure out how to reliably push past that 108 qubit mark, they are incredibly vulnerable.
Vulnerable to who?
Better capitalized incumbents, specifically giants like IBM, who are also pouring billions into superconducting quantum technology. IBM could just swoop in and capture these newly mandated federal budgets.
Because IBM has the balance sheet to absorb massive losses while perfecting the technology, and Rigetti just does not.
Exactly.
That brings me to a massive red flag I noticed in the data. Hold on. The Chief Technology Officer, David Rivas, recently dumped 518,087 shares, cashing out for roughly $13.1 million.
Yeah, that made some waves.
And a board member, Rayo Johnson, sold about $4.3 million in stock.
True.
Sarah, sorry, but if the government is about to hand them a golden ticket, and they are building this revolutionary technology, why on earth is the guy building the tech cashing out now? How do we square that?
It is the multi-million-dollar question, isn't it? And it serves as a glaring cautionary signal.
It really does.
When the person architecting the technology takes $13 million off the table right before a critical scaling phase, the market absolutely notices.
Of course they do.
Now, to provide the realistic corporate context here, insider selling at high-growth, highly volatile tech names is pretty standard practice.
Sure, they get stock options.
Right. Executives often receive heavily stock-based compensation. They need to diversify their personal portfolios, they have automated 10b5-1 selling plans, and they have to pay significant taxes on vested shares.
I get the need for liquidity, I really do. But $13 million all at once, right around the time this executive order drops and the stock pops.
The timing is undeniably rough for optics.
Very rough.
It underscores the extreme fragility of the situation. It tells investors that even the insiders recognize the profound execution risks ahead. They know they're in a race against IBM and physics itself, so, they're locking in life-changing gains while the policy hype is hot.
Basically taking some chips off the table.
Exactly. If you're looking at the stock, you have to weigh their stated confidence in the technology against the reality of their personal financial decisions.
Okay, so looking at the technicals and sentiment. That tension between future government darling and unprofitable cash burner with insiders dumping stock, how is Wall Street actually pricing that in real time?
It's been wild.
Following that June 22nd shockwave, the stock popped significantly, hitting an intraday high of $22.50 before settling back down around $21.25. It seems like it hit a wall in the low 20s.
That settling around $21.25 represents the market testing psychological resistance levels, as investors basically digest everything we just talked about.
And retail sentiment.
Retail sentiment on the message boards and social platforms is highly bullish, driven almost entirely by the sector momentum of the White House initiatives.
Sure, retail sees the mandate and buys the narrative of a federally backed winner.
Exactly. But institutional investors are weighing the massive cash burn against the impending mandate.
And yet, Wall Street analysts seem surprisingly on board with the catalysts. Wedbush and Rosenblatt have both set massive $40 price targets.
They have.
And the median analyst expectation across the board is $33. So you have a stock sitting at 21.25, and the median Wall Street expectation thinks it should be at 33. That is a massive spread.
That spread is the literal price of uncertainty.
Makes sense.
The market is pricing in the risk that the Chichep Hess money might get delayed or that those restrictive terms might derail the deal entirely.
Right, the Google scenario.
Yeah. They're pricing in the reality that scaling to 108 Kipupis is great, but getting to 1,000 QUITs might be literally impossible for them. The gap between $21 and $33 is the market waiting to see if Rigetti can actually execute when the federal procurement windows open.
Which brings us to the catalyst clock. If you're following this sector, you aren't just buying and holding your breath for 2028.
No, there are things happening right now.
Massive, immediate deadlines dropping over the next 3 months. We have their August 2026 earnings report, which should give us hard numbers on their cloud deployment revenue and, hopefully, a critical update on the CHIPS Act negotiations.
That will be huge.
But the real ticking clock comes from the Department of Energy.
Exactly. The White House gave the Department of Energy a strict 90-day deadline, counting from June 22nd, to finalize technical specifications for their quantum programs.
90 days.
Right. That means the government is currently writing the exact requirements a computer needs to meet to get federal funding.
And following that,
there is a 180-day window specifically dedicated to exploring private sector partnerships. Rigetti is a prime candidate for those partnerships, assuming their 108 group system can meet whatever specs the DOE finalizes.
I want to pause here for you, the listener, and remind you why this matters so much for your wealth-building context. This isn't just about whether one specific stock goes up or down based on an earnings report.
No, it's bigger than that.
We are watching a completely new federal sector being born in real time. You're seeing the exact moment a technology transitions from a university lab curiosity into a mandated, multi-billion-dollar line item on the defense budget.
It is a rare structural shift. It requires investors to completely reevaluate how they view risk and timeline in the tech sector.
So bringing it all together, what's the final verdict from our analysis today?
Based on the data, the analysis yields a bullish score of 7 out of 10.
7 out of 10, okay.
Yeah. The fundamental thesis here is that Rigetti offers asymmetric upside exposure to a nascent sector. They are heavily de-risked compared to smaller private peers because of that massive $569 million cash position and the immense potential of the government-backed CHIPS Act award.
Plus, they have the physical foundry, and they have the hardware integrated with major cloud providers.
Exactly. But the analysis points to a multi-year time frame for this to really play out.
It's a high-risk situation.
Extremely high risk. It is heavily dependent on them successfully navigating those Department of Energy milestones over the next 90 to 180 days.
Right. If they secure those partnerships and finalize the CHIPS funding without toxic terms, they have a clear path to closing that gap toward the $33 analyst target.
But if they fumble the execution or run out of cash trying to solve the decoherence problem, or if IBM just beats them to the punch,
the bottom could easily fall out.
It's the definition of a high-stakes waiting game. The narrative has shifted to a structured disbursement reality, but at the end of the day, the quantum physics still has to perform.
The hardware actually has to work.
Exactly.
Which leaves us with one final, incredibly provocative thought pulled from the policy side of our discussion today. We talked earlier about how federal agencies are being forced to migrate to post-quantum cryptography by 2031.
Right, the PQC migration mandate.
But the reason that mandate exists is terrifying.
It really is.
It's because quantum computers will soon have the processing power to break all current classical encryption. Every password, every secure database, every piece of financial data, and every encrypted military communication we currently rely on will be laid bare.
Completely exposed.
So here's something to mull over on your own. If the government is scrambling to fix this by 2031, are we already too late to secure our existing data from bad actors who might just be harvesting it today, storing it in massive server farms, specifically so they can decrypt it tomorrow?
The harvest now, decrypt later strategy.
Exactly.
It is the silent, pervasive threat underlying this entire technological race.
And that is why this isn't just a financial story. It's a global arms race. So definitely keep your eyes on those 90-day deadlines, and we'll see how this quantum reality plays out.
It's going to be a wild ride.
Remember to subscribe if you haven't already. And again, don't forget to check out the VIP Algos. The link is below in the description. It's a must-have for tracking catalysts exactly like this one.
See you next time.
Thanks for listening, and stay smart out there.